All right, hello everyone, and welcome to another video where someone requested that we do a video talking about what happened in 2019. And to be honest, I spent a fair bit of time doing a bit of background research for this because 2019 feels like decades ago, and not a lot happened in 2019 compared to the dumpster fire that is 2020. But in going back through the RBA reports and stuff, just have a look at the key events that happened in Australia. We'll kind of get to that through the slides that we're going to go through here. So we're going to go through the key goals, the domestic economic goals, how they kind of went, how monetary policy changed, how budgetary policy operated during that time, and then a few kind of AS factors, so consumer confidence, business confidence, and the exchange rate, and just kind of how they operated in 2019, once again, which feels like an eternity ago. All right, so first we're going to look at the budget. So with the budget, one of the big things in 2019 was the looming promise of a surplus and achieving fiscal consolidation, or at least moving towards fiscal consolidation. So one of the big pushes was that we were going to have a surplus, which we hadn't had in decades. And that was going to help us achieve fiscal consolidation over the medium term, where our surpluses would cover our previous deficits. We had a predicted surplus of 7.1 billion in that 2019-2020 budget. However, this became a $92.3 billion deficit when we got to the budget outcome. So why is this? Well, most of it ended up being due to the impact of the bushfires in early 2020, as well as the global economic slowdown, which was beginning to occur due to COVID. So most things that happened that were significant in 2019 were the bushfires right at the end of the year. In early 2020, a lot of it comes into that. So the bushfires are a major reason why that surplus became a deficit. This is one of the major areas where I think they could potentially ask about having a question like explain why the estimated budget isn't the same as the budget outcome. And then you use that example of, well, they projected a surplus of $7.1 billion, and that became a $92.3 billion deficit. As an aside, I saw this video the other day, which was released in March, but it's oddly really topical right now. There's a link here. I'll put a link in the description below. But Sammy J, who's a comedian, made a video in March called Where's My Surplus, which is a picture book where a dog named Josh, who I assume is named after Josh Frydenberg, looked for the surplus and couldn't find it anywhere. Highly recommend to watch if you want to see a bit of funny economics content, which doesn't often exist. Monetary policy. So we had continued to be expansionary in nature with 2.25 reductions in the cash rate, bringing the cash rate target to 0.75 by the end of 2019. So we were at that 0.75, and there were beginning to be questions raised about the effectiveness of monetary policy in the current economic situation. And we're in a situation, you'll see when we get to the goals, where the economy was kind of stagnant. We were kind of just plodding along, not quite reaching our goals, and nothing really that was happening was being beneficial towards them. It really made you question the approach of returning to surplus when we weren't actually achieving those domestic economic goals in the first place, but it's a big political thing to be able to say you're returning to surplus. So some of the effectiveness issues that were coming out was that the major banks continued to either not pass on rate cuts or only passed on a smaller percent. It's a similar issue to what's come up in 2020. We had 2 rate cuts in March, and the second one, some of the major banks didn't pass on a single thing, which means it's kind of meaningless for households. So this means monetary policy probably hasn't had quite the effect of stimulating the economy like it should, because households aren't getting that kind of that cash flow impact where they have more disposable or discretionary income than they would have previously. So that is a real negative there. So then we move on to the goal of low inflation. And if we were to look at 2019 is this period here from the 0.8 to the 1.7. As you can see, it's kind of, to do some rough math, averaged around like 1.5, 1.6 in 2019 and continued to be just below the goal despite those interest rate cuts and tax cuts for households. So as you can see there, we weren't really hitting that inflationary goal. Prices weren't rising at that on average of 2 to 3% on average over time, but they were close. That's just consumer confidence you'll see later on was fairly low in the first place. As an aside, if anything comes up about inflation in 2020, the only reason inflation hit 2.2% in March was because of the panic buying. So if that comes up, that's not achieving the goal. It's not an average over time, but that was panic buying. GDP growth. So our GDP growth ends up being this, I believe it is the 1.7 here until 2.3 there. Once again, below the goal. Average just below 2%, which makes you question the return to surplus. The 2.3% growth there, that's in the holiday period, which kind of, once again, we tend to have more significant levels of growth there, largely due to low consumer and business confidence throughout the period, which we'll have a look at pretty soon. So pretty exciting in terms of economic growth. Dollar full employment, if we look at 2019, 2020 there, fairly stable, pretty damn close to the goal. Slightly above it, fluctuated slightly, but we're pretty much right on that 5% almost the whole time. Conversations that come up in recent times is the increase in underemployment and underutilization of labour. Therefore, the goal of full employment isn't actually an accurate telling of, or the goal isn't actually an accurate indicator of economic activity. So there are things to think about, seeing as we were so close to the goal of full employment and yet growth and inflation weren't really occurring. It makes you question things, because if we are at full employment, there should be a lot of spending. There should be a lot of growth happening. Consumer confidence. So this is where we get into kind of like the reasons why for those things. So if you look at consumer confidence here, we kind of draw up where 2019 was and then draw up where 2020 was. Obviously 2020 consumer confidence fell off the cliff, weirdly recovered, then fell off the cliff again, second wave. But as you can see, consumer confidence was just falling throughout the year, and that kind of explains all the indicators. Consumers aren't feeling confident about future income, employment, etc. They're not going to spend, and then that's going to lead to less growth, less inflation, more unemployment, or more underemployment, and that's a really big reason for that. So consumer confidence or consumer pessimism is a big reason why, because you can see we're under that 100, which is kind of like, if we're above 100, consumers are feeling confident. If we're below it, consumers are feeling less confident. So falling consumer confidence was a big reason why we weren't achieving those goals. Business confidence, if we look at, fairly similar. So if we do the same, like draw ourselves 2019, 2020, you can see it's kind of like fairly average, but towards the end of the year started to fall a bit, only to spike in the last little bit. Business confidence, as you can see, there's all little spikes throughout at the end of each year. That's the holiday period. Businesses start to feel more confident there because people are spending money. But in general, business confidence was below that 0 index rating for at least half the year. If businesses aren't feeling confident, they're going to lay off their employees, they're going to produce less, they're going to downsize, and that's obviously not going to be good for the achievement of our goals. Lastly, the exchange rate. The exchange rate helps explain a whole bunch of other things that we haven't really talked about yet. So if we look at 2019, we have it from here, from January until the start of 2020. In general, the exchange rate decreased, or depreciated, to use better terminology. It didn't depreciate by much, but it was pretty significant. Like we got down to at points like 7 US cents as interest rates cuts were introduced and people moved their foreign investments back to other areas for a higher return. This meant that due to these kind of like cuts and this depreciation of the exchange rate, we had increased exports, we had increased terms of trade, the current account moved more towards a surplus. And so all these things led to a lot of really positives in Australia in terms of our aggregate demand, because all of this is going to lead to increased aggregate demand, which should lead to everything else being more beneficial, but obviously domestic things were a lot lower overall. But yeah, this is essentially it. Like 2019, very, very bland year. 2 interest rate cuts, a promise of a surplus, but we ended up in a massive deficit, and nothing really happened until we had to respond to the bushfires and then COVID. And then 2020 happened, and now 2019 looks like if you were to write a book on what happened in the economy, 2019 would be like this thin, like double-sided A4 sheet of paper, and then 2020 would be this gigantic War and Peace style book. So that's essentially everything. It's probably the people who requested this probably not as helpful as you would have hoped, but there is still some useful information here. Hopefully it was helpful to you. If you have any other questions about it, feel free to put a comment below. I think I'm going to do another video pretty soon that delves into Area State 3, Australia and the world economy, in a bit more detail, because I've noticed I've just been correcting like practice exams that my class did. I'm going to buy those. They're available online somewhere, but I don't get paid for them anymore, so I don't really mind that much. But there's a lot of issues in terms of like in that Australia and the world economy where things interrelate and how to answer in that way. So I'm going to think about doing stuff in that way, as well as kind of like the finer parts of what questions are asking you to do and making sure you actually respond to that. But other than that, as always, yeah, ask questions in comments or send me emails. I'm more than happy to help. Other than that, I hope you have a wonderful day and I'll talk to you next time. Goodbye.